All right, let's dive right into this explainer. Today, we're unpacking the sheer, staggering financial scale and growth trajectory of Interactive Brokers. We're looking specifically at their results from the first quarter of 2026, and honestly, the numbers are pretty wild. If you want to know where the momentum in modern brokerage is shifting, this is exactly where you need to look. We'll be parsing through their raw financial data, examining their tech, and zooming out to see the broader market ecosystem they operate in. Here is what we're covering today. First, the Interactive Brokers boom. Then, their Q1 2026 financial highlights, a look at their track record of growth, the IBKR tech advantage, a quick breakdown on margin trading, and finally, the broader market ecosystem. Starting off with Section 1, the Interactive Brokers boom. Before we even touch the quarterly metrics, you've got to understand the bedrock this platform is built on. Get this, $21.3 billion in total equity capital. But here's the kicker for the financial sector. They carry absolutely zero long-term debt. None. It's a literal financial fortress. This kind of bulletproof balance sheet is exactly what lets them innovate aggressively, offer crazy competitive margin rates, and just brush off market volatility without the structural weaknesses you see in heavily leveraged institutions. Moving on to Section 2, Q1 2026 Financial Highlights. So it's one thing to have a solid foundation, right? It's a whole different ballgame to be growing at this velocity at this scale. First up, the user base. Interactive Brokers just hit 4.8 million client accounts. That represents a massive 31% jump year over year from 2025. Adding over 1 million accounts in a 12-month span, that is a hyper-aggressive market share grab, pulling in everyone from everyday retail investors to highly active day traders and complex institutional funds. And those 4.8 million accounts aren't coming in empty-handed. Client equity surged to an eye-watering $789.4 billion. That's a 38% spike year over year. Think about that for a second. They are literally knocking on the door of holding $1 trillion in client assets. So we're not just seeing more accounts, we're seeing incredibly well-capitalized accounts flooding the platform. Now, how does all that scale translate to actual business health? Try a 77% pre-tax profit margin. In the brokerage world, a margin like that is just staggering. It generated $1.7 billion in net revenues for the quarter, which proves their tech-heavy automated infrastructure scales like an absolute dream. They can stack hundreds of billions in client equity without blowing up their overhead. Let's pivot to Section 3, a track record of growth. Let's zoom out for a second because this 2026 boom didn't just happen overnight. It's the payoff of a relentless multi-year grind. Look at their adjusted net revenues here. You can clearly see a 22% compound annual growth rate, climbing like a staircase since 2021, blowing past $6.1 billion by the end of 2025. This smooth upward trend represents a business that is methodically expanding its reach and its global footprint year after year. And just like those massive profit margins we talked about, the revenue flows right to the bottom line. We're looking at a 27% CAGR and adjusted earnings per share over that same period. It's a masterclass in operating leverage. Their EPS is actually growing faster than their top-line revenue, which, as an investor, is exactly what you want to see. It means they're getting more profitable as they get larger. To completely lock in this narrative, check out their adjusted pre-tax income. We see a steady 26% growth rate leading right up to the 2026 boom, closing out 2025 with over $4.7 billion. The incredible continuity across revenue, EPS, and pre-tax income, that's exactly what cements that formidable financial fortress status we talked about at the beginning. All right, Section 4, the IBKR tech advantage. So what's actually attracting all this capital and keeping those margins so high? A huge piece of the puzzle is their deep AI integration and proprietary tech. Take their investment themes tool, for example. Instead of just punching in a ticker, you can search massive macro themes across the S&P 1500, like generative AI or nuclear energy. The AI instantly maps out the connected companies, competitors, and products. It literally lets traders uncover hidden patterns and turn a broad economic idea into a highly actionable trade strategy in seconds. Next up, Section 5, Understanding Margin Trading. Let's take a quick educational detour here, because margin trading is a massive revenue driver for brokers and a core strategy for their users. Put simply, trading on margin means you're borrowing money from your broker to amplify your buying power. Say you have 10 grand, but you want to buy 20 grand worth of stock. You put down your initial fraction, and the broker lends you the rest. Interactive Brokers uses their massive cash reserves to fund these loans, earning interest while supercharging the trader's position. But Here's the catch, and it's a big one. You have got to weigh the awesome potential of leveraging those gains against the brutal reality of amplified losses. Because you're trading with borrowed money, if a trade goes south, your losses apply to the entire leveraged amount, not just what you deposited. It's a massive double-edged sword, which is exactly why advanced platforms have to build out such robust risk navigator tools directly into their software. Finally, Section 6, the broader market ecosystem. Let's pull back and look at the whole ecosystem. Millions of accounts, advanced AI, billions in margin borrowing, it all collides in the global equities market every single day. Take a look at this snapshot of top holdings from the Quiver Quantitative Russell 3000 ETF. We're talking heavy hitters here. Lam Research, Caterpillar, GE Aerospace, Chevron, Coca-Cola. When IBKR handles nearly $800 billion in equity, this is exactly where that money is flowing, constantly moving in and out and pumping liquidity into these massive global positions. I want to leave you with this final provocative thought. As this absolute juggernaut continues to deploy cutting-edge AI, sitting on nearly $800 billion in client equity and a completely debt-free balance sheet, how does that alter the landscape of investing tomorrow? When you put institutional-grade firepower directly into the hands of nearly 5 million everyday and professional accounts, the market itself is bound to evolve. Thank you for joining me on this explainer, and keep questioning how the mechanics of the market are changing right beneath our feet.